Robinhood is loaded with so many great features to help you trade options, but some of them just confuse me. So in this video, I'm going to show you the features that I use every day when I trade options that actually help me. The first one is the most important one in my opinion, and that's going to be your max loss or max profit. So we go to any stock. I'm going to do Mara. This is one that I trade a lot of options on. Then we go to trade options. And then we have May 15th. So today is the 9th. I'm filming this on the Saturday. It's going to look a lot different during trading hours and depending on what day and the price of the stock. This is just an example to show you the features. So right now the price is at $12.97. If you think the price is going to go above 13 by the 15th, then you could buy this contract for $72. So you go to buy one. So now the max loss, this trade, the most you could possibly lose is $72, and the max profit is unlimited. So the max loss is 72 because you're just buying this contract for 72. Now, when you buy it, two things could happen. One thing is if the price stays about this, well, three things could happen. If the price stays about the same, then slowly over time, your contract's value is going to go down. Even if the price goes up a little bit, but not above your strike price, you're still going to lose money. But if this price goes over, then this contract that we bought for 72 could go up. It could go up to like 85, could go up to 100, could go up to unlimited. The unlimited means that this stock theoretically could go all the way up to $1,000 a share. Most likely is not going to happen, but let's say something crazy happens with crypto. This one follows crypto. If like Bitcoin goes up like crazy, this could go up really high and then you can make a lot of money. So unlimited upside and then max loss is 72. So it's good to know. I usually keep these around $100. My portfolio is about like a little over $10,000. So I don't like to risk a lot in my account. These I just do for fun. They're really risky if you're just buying naked calls. And then that's what it's going to look like. And then I'll show you the other features so you could see what the trades look like. But let me just show you what it looks like if you do a covered call. So now I'm going to choose a stock that I have. So SoFi, I have 200 shares of this stock, so I could do 2 contracts of covered calls. So we go to the same thing, but now instead of buy, we're going to do sell. So now instead of buying the contract for the premium and hoping that it goes up so you could sell it for a profit, now we are doing the opposite. We have the 100 shares, well in this case 200 shares, so we could sell the call. So right now if we go sell call for 16, the price is at $15.82. I could sell 2 covered calls because I own the stock and I will make $55.92. So that you get paid the premium no matter what. $55.92 will be in my account, and then 2 things could happen. The stock stays under 16, I just keep the premium, and then I could do it again next week. I still have the stocks. If the stock goes over 16, then it gets assigned at 16. So when you choose your strike price, choose one that's higher than what your average cost is. If that's available. Right now I kind of messed up with SoFi because my average cost is $19.34. So I won't get that much money if I go above my average cost is basically worth it. So that's a risk that you do with covered calls. So that's how you see your max profit and max loss. But it may look really scary on covered calls because the max loss, instead of our max profits unlimited, our max loss is unlimited. So that means that you could buy this stock. You could buy it right now for $15.82, and then the stock could go all the way down. Even though you don't get assigned, you could still lose a lot of money with the stock. So that's what happened here. I made money with the premium, but I'm down. I made a couple $100 with the premium, but I'm down $700 with the stock. So if I were to sell this stock right now, I would have like a $500 loss. So that's the risk you take with covered calls. The next feature is going to be simulate my returns. So here we go. So if we go to trade options, we choose the 15th. So now let's do the $13 one. You do that one. And now it's a hidden feature because this arrow doesn't look like it's active, but if you press it, it comes down. So right now you'll see the price. The price is $12.97. We're thinking about buying a call, so we want the price to go up. So even sideways, so even though the price is at $12.97 and our strike price is 13, even if it goes all the way up to $13.72, then we just break even. So you could buy it. I used to think that a call, you think it's going to go up, a put, you think it's going to go down. So if it goes up a little bit, you'll make money down a little bit. That's not the case because of the time decay. So you don't start making money till after 1372 in this case. And then after it, you start to increase money quickly. But if the price goes down, you start to lose the money on that contract super quickly. So this is really cool to get rid of the guesswork and see what happens. Next feature is going to be a really cool feature, and that is our profit and loss. This makes it really fun. You can keep track of it, keep track of your weekly and monthly income to see if you're actually making money, or if you should just take your dad's advice and just put money into like the S&P 500 and wait, which is like a 95% chance that you'll end up doing better in the long run. But that's not really that fun. So here we go. We're gonna go to our options. So it's kind of hard. So options here, especially if you have none going, you may scroll right past it. But if we press that, this brings us into our options. It's going to give us all of our history of our options. So if you wanted to see what happens when a covered call gets assigned, it'll be here. So the money's in my account. This got assigned at $12. That's what my strike price was 12. It went up a little bit past 12. But the hidden feature is over here, realized profit and gain. So you could go into 1 week, and it's going to show you down here your trades. So SoFi expiration, I made $8 on that. Snapchat expiration, I made $17 on that covered call. ET expiration, I made $7. And then these are the non-covered calls. So this one, I just bought the contract at 33, sold it at 39, made a quick $6 profit. Sounds cool, but if you scroll down more, it's not really that cool because the one before it, I lost $18. I bought it for 78 and sold it for 60. So these are really risky. Sometimes you'll make money, sometimes you won't. But this is where you'll see if you're actually making money in the long run. So 1 week. So this month, 172. That's because I've been doing mostly covered calls and not losing money doing the regular calls. And then you could do your max and all over here. So you could check this if you're actually making money or if you're not. And if you want to see me run my full covered call system, check out this video over here.